Here's what we're going to do. I think the first thing we're going to talk about is market related, and then things will probably devolve from there. But I want to make sure everyone knows that we have like social media royalty in the house, right? Would you agree? Don't look at her. You too.
Oh.
Well, we'll do that in order. First of all, Haley Sachs, a.k.a. Mrs. Dow Jones, the funniest financial media person that I have ever met. Yeah. Like hands down. Let's give that a round of applause.
Oh, thank you.
No pressure, but I really want you to be funny today.
I know.
I really want you to be yourself today.
I haven't decided yet.
Okay.
I might hold back. Just kidding. I would never.
And Dan Nathan, you might have seen me just completely shredding his takes on the market on fast money over the years. And Dan is an accomplished trader and a hell of a financial media person himself. And Dan, thanks so much for coming by. I know you do 7 other podcasts, so I appreciate that you had the holiday off from all of that.
Did you notice that I literally walked in here with just a cup of tea and sat down, which is actually amazing because I see everything that you guys just had to do to get us in the seats, and it's a lot of work. So it's really fun to be on the other side of it.
It's a lot of work. So how many days a week are you doing your pod?
We have a once a week on the tape podcast you have been on. I hope Michael Batnick will come on very soon. Haley Sachs will come on and make us all laugh. But that drops Friday. It's not really in competition with the Compound. You know what I mean?
No.
I think they're good.
I look at them as sister shows.
Yeah. So
as long as mine is better.
We're actually going to be launching. We are going to be launching a new podcast, and you two is going to love this thing. It's going to be on tech. We're looking at through 3 lenses: through public markets, private markets, and through the media. And we're calling it OK Computer, but it's OKAY, exasperated computer.
Okay.
That's pretty cool. So
Tom York might sue you.
No, did you see what I did there? I changed it up here a little bit. And we're going to launch another one.
So so the podcast is Guy Adami and Danny Moses.
Correct.
And they're both great. Yeah. And I listened to your last episode the other day, and I was saying, like, you guys almost sound like sportscasters together. Is that deliberate? You opened the show talking about sports betting, so it's not my fault to make that connection.
Yeah, and we had Dominic Sue today on, which was pretty fascinating to talk to him. We did not talk about betting. We did talk about the NFL. We talked about a lot of stuff that he's just interested in. And you know, for us, what we wanted to try to do with our podcast, and you guys are doing it too. You guys are doing obviously an amazing job here. Is like, we love sports talk radio. You guys grew up listening to it in the car or whatever.
But I could tell that all 3 of you guys like have that connection with each other.
Mike and the Mad Dog.
Yeah.
Big fans.
That's what we're going for.
Of course.
Yeah.
It works.
Thank you.
It's great. So what are you saying about the market this week?
Yeah, what's your problem?
Wait,
how about that as a segue?
I thought we sold Rosh Hashanah and buy Yom Kippur, right? Like, I know that seems really generic, but they ripped right into the close today, right into our atonement.
I think that still would have worked though. Isn't the Dow down 6 out of the last 8 days or something?
Yeah, something like that.
It's barely down. It's
well, all right. So this is the one thing is like those peak to trough declines were getting narrower and narrower. Did you notice that over the last year? And that's the one thing that I'm just saying I think it makes sense to keep an eye on, because also the moves to new highs, just if you think about the other side of it, are getting smaller and smaller. So the range up 20% on the year, up 100 and something percent from the March 2020 lows, is getting tighter and tighter. Right?
Could the max drawdowns go positive? It was like we were down 10%, then 5, then 4, then 2. Can we just make new all-time highs every single day?
Weird.
Wouldn't it be funny if like the next version of a drawdown is up 1%? Like, and everyone's like, this market's terrible. Yeah. Like, that seems where we're headed. All right, this is your tweet. We're going to read it and watch the big screen. I swear, this is Dan Nathan.
Hold on. Why don't you read it for us? This is your voice.
Oh, Dan, yeah, you
Dan,
do. Why
are we reading your tweets? Tweet it to us.
All right, at risk reversal. I swear this happened in February 2000.
Why are you giving yourself a lisp?
At the hedge fund I worked at. What?
Oh, man. Sound good to me.
Do it normal, though.
No, I swear this happened in February 2000 at the hedge fund I worked at. After a brief sell-off in the market, a tech analyst PM, who was a former telecom engineer, stood up on our trading desk of 20 people and declared, "The market will never go down again." And then my comment here is me now saying.
It really feels, I mean, that's when they pull the rug out. But the sentiment.
I love the screenshot from Bloomberg.
But Dan, were you being ironic? Were you trying to be silly?
Status.
Were you being serious?
No, huge status.
Hashtag status.
Oh, you ever go on that chat? Bloomberg chat? I met some guys there.
B-chat?
Ooh, yeah.
Yeah?
Some cool stuff happening on
I met
Bloomberg
some guys there. They're not that interesting, though.
Wait, is that your Tinder? Bloomberg chat?
A little bit, yeah.
Okay.
I mean, until they started to make me pay for it.
Right.
Yeah.
Do you get to
you
use
can
their
buy
charts?
Rolexes too on it. They have like a used part of it. You can buy like shit.
The marketplace?
Yes, the marketplace. There's a lot happening.
Powered by eBay?
You wish. It's like powered by, I don't know, probably Saudi Arabia or something.
I was in the market in February of 2000.
Yeah.
And Haley was in junior high. Michael wasn't born yet.
Michael wasn't born yet.
I distinctly remember a conversation with another stockbroker, and we were like always pitching stocks, right? We were pitching like 3Com on the Palm Pilot spinoff, like Lucent. And I remember somebody making the statement, why would anyone ever pitch anything other than a tech stock? And then, of course, the NASDAQ fell 90% after that, and every tech stock got demolished. And not only that, but non-technology stocks did fine. Isn't it possible that we get a blow-off here and everything tech-related that's been leading the market for 10 years gets wrecked, but people who are buying boring shit do okay?
Yeah.
Is that possible that we could get to that place again?
I mean, a year ago at this very time, we were contemplating how deep that correction was going to be. Remember, we had that blow off in August and everyone was like, what the heck is going on here? And all the major tech names were just going berserk. And then September 2nd, we opened up and then it closed on the lows. And then literally the S&P went down 10% in a straight line over the next few weeks. And the NASDAQ went down 14%. But Amazon and Apple and Microsoft, the biggest names in the entire market, went down more. They went down 20%, 22% or something like that. And so those are the sorts of things, like that sort of fear, I think, has not gripped the market since then. And that's the point of the tweet. Yes, Michael Batnick, it is being ironic in a way, because if there's not fear in the market, then you can't have those sorts of situations that are constructive, right? Like you guys are really, I know you guys are into behavioral finance and stuff like that. You just can't go up in a straight line. I mean, things have to sort of correct a little bit. And I feel like we're in
It's
a
like
very
sports betting.
A little bit,
Yeah.
and I have some thoughts on that we're going to get to later. But that's just my take here. I think if you're one of those 4650 S&P year-end people, you want to see a 7-8% correction sometime in the near future.
Because 4650 from here doesn't do you much good. If you can catch it down 7%, down 10%.
Yeah, I mean, so Microsoft this morning, it's trading up 1%, very near an all-time high, because they're going to buy $60 billion of their stock back. That's all they ever do is buy tens of billions of dollars of their stock back. Why is that the sort of headline that should drive, what you tell me, what's 1.5%, guys, on $2.2 trillion? That's a good buyback announcement.
Yeah, but last year, stock splits were driving up monster stocks 10% on the day. So the idea that things need to make sense, like that went out the window a long time ago, I think. I was listening to Kathy Wood.
Have you ever started a rumor like online that then moved the markets?
Did any of us?
Yeah, you can tell me.
I don't think that any
Was
of
it
us
you
know.
who did the Litecoin rumor?
No, God. I
You
mean,
can take credit. That would be cool.
I'm not deep enough into crypto to have even seen it in time to have made money, let alone started it.
I feel like we should try and create more rumors.
Well, you could definitely do it easier with crypto than with Microsoft.
No, crypto. Yeah, we're right in there.
When you see like the people asking you questions and like the investing questions? 'Cause I know you do a lot of personal finance too. Do you get the sense that there's a generation of investors that would never do anything other than buy technology stocks? Like they almost feel like it's the safe way to invest.
I think that's really interesting. Like, is technology the new boring stock?
Yeah.
I think as we see the S&P 500 add more tech stocks too, it's going to become more and more commonplace.
Yeah.
Yeah. I mean, look, you guys are sophisticated. I really try and like produce content for the masses. And so obviously I'm not that down to be like, yo, definitely buy that individual stock, even though you don't have an emergency fund saved. Like, good idea. But yeah, no, definitely a lot of questions about tech stocks.
That's what their portfolios look like. The people that are
it's all that. It's got to be all that.
like they don't have
they're
like
all Tesla. No, it's literally
Berkshire Hathaway in their portfolios.
none. Yeah, but won't the boring stocks do well either way? Like, it's not like
how boring.
Well,
I mean, like say you go straight S&P.
People are saying Apple's the treasury bond in my portfolio.
Come
like
on,
Apple and Microsoft.
Come on.
So they have so much cash that when the stock goes down, they just buy back shares.
Nonsense.
Well, no, of course, but I feel like that's the mentality right now.
Well, there's no regard for valuation right now. So Apple's trading at probably its highest,
What's the valuation?
It's about
thing
26
is so
times,
low.
and for fiscal 2022, they're expected to grow earnings maybe
What's Apple's multiple
1-2%
on next year's earnings?
and grow sales, low single digits. So you tell me what you're playing for here. Are you playing for services growth, which is a higher margin business? I kind of understand that. I just don't think it's particularly natural that here's a $2.5 trillion market cap stock that investors think now is that T-bill.
Can I say one thing though? You know what you're doing that hasn't been working? Not that what you're doing is not working.
Many things.
No. But
In life or what?
you're doing second level thinking. So I'm working on this like pet theory.
Okay.
Like,
Ugh,
I know
that phrase.
but I am. So first level thinking is Apple's a great company. My mom has one. My dad has an iPhone. I have an iPhone. So therefore, Apple's a buy. That's like first level thinking.
Yep.
And Howard Marks talks about second level thinking, where he says, okay, but if you recognize that Apple's a great company,
Yeah. Everyone
like,
else does.
isn't that already in the stock? Like,
It's in the
doesn't already
zeitgeist.
else. But so my little like pet theory is like, well, if everyone in the market is now a first level thinker, then second level thinking is a waste of time.
Yeah,
First level
what's
thinking is
the
good
third?
enough.
Guys, Dan,
Like
you
Tesla. Tesla makes a cool car. I'm going to buy the stock. It fucking worked. Apple makes a great product. I'm going to buy the stock. It worked like one after another. Even GameStop. I like playing video games. I'm going to buy GameStop. If the whole market is now filled with people that are 24 years old and they're all first level thinking, you're defeating yourself doing any other type of thinking.
But also, doesn't that just bring us back to basics? Like the fundamentals of finance are really simple.
Which are?
You know, like if you look at like Warren Buffett, or you're talking about Howard
Yeah, but what
Marks.
he's saying is that there's a total disregard for those fundamentals at the moment. I mean, I really think that's what's going on. I've seen
I'm saying
this.
it's people betting on brands.
Yeah.
Yeah, betting on brands, but the thinking is sort of the same, where it's like really like sometimes when I read like a Warren Buffett paper or whatever, I'll be like, you know, just like having a fun night in reading WB. But
Like as you do.
as one does, I'm like, oh, duh. You know what I mean? Like the
Yeah, but
duh.
you know what you guys just described is why the reason that people are telling you they're buying NFTs right now. I mean, that's exactly it. It's about identity.
What do you think
It's
about
about
Steve Cohen?
association. It's about all. I mean, like that's how you're saying that's what's permeated into the NFT market because let's just say you're like a millennial and you bought your first car and it was a Model 3 and it was 45 grand, which is you could have bought like, you know, a Jeep Cherokee for 45 grand, but you bought that and you love it and now you feel you're a part of something.
Yes.
And Elon Musk is doing this, right, to the SEC and to the haters and this and that, whatever.
Oh, so
And
it's
now-
identity.
Well, now you're part of a movement. Yes.
Yeah.
You must, I mean, I see that every day. Like
That's a community, but that's what's really so powerful about it. Like you're
Yeah.
only as strong as your community.
I just feel like
people belong to the tribe that's into their investment. And second level thinking, you're defeating yourself because that's not how other people are acting.
in a bull market. So second level thinking is another form of risk management. And in a bull market, it looks foolish, right? Like by definition, anytime you manage risk when stocks keep going up, you look like an idiot. But in Dan, you were probably on TV talking about this in 2013 with Apple. Who's left to buy? Everybody owns Apple. It's the most overloved, overbought, overowned stock. It was a
and
500.
then went up $1 trillion.
That was when it was at $500 billion market cap. It's at $2.5 trillion. And a lot of it recently is multiple expansion. But the fundamentals of these giant companies, we've never seen this before. And Kathy Wood was talking about, you were around, there's too much muscle memory at the top with people who control money to 1999 that everybody is so afraid that we're going to see another tech wreck.
Yeah, but you know what's funny? Her ARK investment ETF is down on the year. Her top 5 holdings are all down or massively underperform the market. And so that's a fact. I see Batnick going over
No,
the
they look
Bloomberg
terrible.
machine.
No, T-Dog, Zoom.
And so what is actually innovative about Roku? You know, what is innovative about, you know, I mean, listen, you get my point is like Teladoc is down 30%.
Zoom cut in half. Looks terrible.
Yeah.
Yeah, but also like she should know that no one uses Roku. Like if we're going back to like people making these
but the
stock
ad
picks,
growth
their
on their streaming
personalities.
thing.
Who does use a Roku?
whatever? Like streaming.
You know who uses Roku? People that bought their TV at the Price Club. I
that's
swear to God,
okay.
if you buy a TV at BJ's,
Sounds kind of elitist.
no, I'm just saying this is a fact. These are facts. I'm not saying there's anything wrong with it. I have a TV that we bought very cheap, and Roku is the operating system preloaded. So de facto, if I want Netflix on there and all this shit, I'm
gotta-
downloading it from Roku.
Throw Roku on the trash heap of tech, of hardware like TiVo and stuff like that. I mean, you can tell me at one point, I think it had like a $75 billion market cap in the not so distant past here. And you're saying to me, like, look at all the streaming stuff. Look at all listen, this is where Apple's going to basically end up, once they have the content that's the reason to go use an Apple TV, you know, that drives you there, they're going to aggregate all that stuff. So all this stuff that's been unbundled, it's going to be bundled on that little black
Rebundled
box.
into like the
That's
iTunes
right.
of TV.
That's right. That's it.
Let me read this. I think the stock market's drunk, personally. This is from the Wall Street Journal. Joby Aviation. Anybody heard of that? Okay, it's like electric air taxi. It's an electric helicopter. Nobody will ever fucking get into one of these as long as we're alive.
Never.
Okay.
I'm not.
Fine. It's going to begin an electric air taxi service in 2024. I hope the CEO doesn't hear this and say I'm betting against Josh Brown. Its current valuation is worth more than Lufthansa, EasyJet, or JetBlue. Earlier this year, Tesla was worth more than the next 9 car manufacturers combined. Only now it's bigger than the next 6. Beyond Meat, which is made with pea protein, is worth more than the entire market for peas eaten globally. This is Andy Kessler, by the way. He's a great writer. Used car sales platform Carvana is worth more than Volvo, Honda, Ford, or Hyundai. Airbnb is worth more than Marriott and Hilton combined.
What are you trying to say?
And crypto exchange Coinbase is worth more than the NASDAQ. What I'm saying is that what these things have in common is that they're younger, newer brands
With
and
a
more
story.
exciting.
With the story.
More exciting than people's dad's brands. So Carvana versus Volvo, Honda, Ford. If that's what's determining what stocks are working in the market is how excited people are about the brand, that could go on for a long time. And there's no reason why these things have to revert. Like there's no story that I can tell in my own head that Marriott is all of a sudden going to shoot past Airbnb. And you can like laugh that they own no properties and Marriott owns.
Which would you rather own? I think Airbnb is a better business today than Marriott.
You think so?
I don't even think it's close.
You think so?
Yeah, I do.
Well, they bought Hotels.com. I mean, you just mentioned Carvana. Here's a great example. It's a $50 billion market cap
That's
company.
insane to me.
They have half the sales of AutoNation. AutoNation trades at 7 times earnings. Okay, it's actually growing its earnings. It has earnings. Carvana doesn't have earnings. Okay?
That is the most wild thing.
So AutoNation,
Sick, right?
half of their
so
sales
wild.
have moved online. Half of their sales are used cars. So what is Carvana working on right now? The pandemic acceleration of online sales, and then the disruption as far as original manufacturing of cars. But why is that a $50 billion market cap company?
I'm telling you the
But
answer.
also, I
It's
think
crazy.
but also, I think that is a trend that you're going to start seeing more and more is like sustainability, because people are obsessed with it. So like you're going to see it in cars, you're going to see it in fashion, even more than like a Rent the Runway.
I don't know
think is sort of dead.
What's
but like,
sustainable about Carvana?
that it's not going to a junkyard. Someone's using your car.
But
there
Dan,
is
like,
something sustainable about not producing something new. You're using something that's
with
already in
all
the
of
system.
with all the stuff that that you're talking about, like, so short the expensive one and buy the cheap one.
Yeah,
Like,
it
good
doesn't
luck
work.
with that.
I know.
That's how you go out of
Well,
business.
but here,
Right?
all right. So Josh introduced me before and said, I think you said something about like market pundit. Okay, I didn't. I don't do what you guys do. I don't manage other people's money, and I don't do it the way you guys do it in a very smart, sober manner. Right? That's why people come to your firm to do that. What I'm talking to people about is I'm on a panel on CNBC, the most widely watched, like financial news channel in the world, and I'll be with like 3 or 4 other people, and they're all saying the same bullish thing, right? Like, so I'm just telling you, like that's just the way it goes. Josh, you're on one of those panels. So what I think the value I can add is like, okay, I was trained in this business by some pretty smart guys, not nearly as successful as those people are. I'm just trying to pick it apart. I'm trying to help you think about it a little bit, the way somebody who's entering a trade, you guys know this, or an investment, if you don't know how that thing goes wrong, then you're probably doing it wrong, right?
Yeah.
Like, so that's what I'm trying to do.
Okay.
Yeah.
What if the answer to all of these trades is the same, like how they all go wrong, is all of a sudden somebody wakes up and says, wait a minute, this is overvalued.
Yeah, but they are going wrong. That's the thing. We act as though they're not going. Teladoc was at 308, now it's at 133. Zoom went from 590 to 280. Like, it's not like
That's a good point.
it's
They're not all continuing to
It's
make
not like
new
they're
highs.
all. I mean, these things. This thing got cut in half. Zoom got cut in half. I mean, could it get cut in half again? Sure, why not?
That was the story of the post.com bubble. These things, 01 was worse than 2000, and 02 was the biggest gut punch. I mean, when things that you didn't think could get cut in half again, got cut in half again. I'm not saying we ever do that. I just want to say one thing, though, about each of those parts.
You've been hurt
in the
before.
market.
You've been hurt before. Yeah.
Oh, no, I have. But that's the muscle memory
Yes.
that you just mentioned in
Kathy-
a way.
Kathy was talking about
but
it.
I understand that. But I will say
We're
this.
happy to have you process it.
Why
yeah.
is that company I'm looking up at your board, Jacoby or what was that thing?
Dan, this is a safe space.
It doesn't.
Oh, I'm getting a little animated here.
Joby Aviation.
Joby. All right, here's the one thing. At the top of the market in 2000, the 10-year U.S. Treasury yield was at 7%. At the top of the market in 2007, 8, it was at 5 or 4.5 or something like that. We basically have been at 0 for 10
That
years.
matters.
And that is why that company went public on the NASDAQ through a SPAC the other day, or the NYSE. You know what I mean? That's it.
Right. And then
Let's take a shot every time someone says SPAC.
we're gonna be carried out of here if that's the case. All right, I want to move on to this school thing because I'm like very sensitive about this, and I don't really know how strongly I feel. But Scott Galloway, who I think is a
Fellow
brilliant,
bald,
but also a
Fellow
brilliant writer.
bald.
He was citing this McKinsey study that says school-aged children of the pandemic era are permanently behind where they would have been. And I'll just very quickly, while their parents harass doctors at school board meetings and fight epic Facebook comment wars, our kids are not learning to read or count. McKinsey projects this learning gap will reduce lifetime earnings for K-12 students by an average of $59,000 to $61,000 by the time the majority of these kids have joined the workforce in 2040. That sounds like bullshit to me.
Yeah, that last part.
How do you invent those numbers? Like, where do those numbers come from? Does that sound real to you?
Do you have like an analyst here who made those? Like, I feel
No,
like
this
that's
isn't
like,
us.
McKinsey.
This is McKinsey.
I know, but it's like
That was
have you met-
Duncan. This is Duncan's
Yeah.
production.
I think that, okay, obviously kids got, I can't say the F word. They got screwed by the pandemic, but like what, can we talk about the other side of the coin? Like what are they better at? You know? And like how's the
Coping
world going to
skills.
develop?
That's what
yeah.
memes.
Yeah. So it's like, how's the world going to develop?
Manipulating
around that?
stocks, I
Yeah,
feel like.
it's like crypto billionaires who are like 11. Okay. Are they going to need to know how to read? Because they have a mining and they're like third bedroom.
As
good.
See,
Kid
she got
can't read,
funny,
but he can mine.
She got funny, but as a parent of teenagers, I'll just tell you this: is that there weren't too many things they got better at, and it really depended on the school that they went to, whether this is going to be impactful or not. And I just look at kids. I live here in New York City, and back to what Michael's going to say, it sounds a little snobby. The kids who were in private schools and had the tech-enabled ability to do this stuff, and they're doing great. And
so I feel like what you're saying is my daughter is going to work
Yeah.
for your daughter at some point, which I'm okay with. Flexible hours.
It's just a really sad thing. I mean, I think a lot of public schools, no matter where you were in this country, they took a long time to get up and running.
Well,
They
so
probably
wait a
didn't
minute.
do things properly last year, right?
So it's not.
Well, it just
no
shows
matter
a
where
deeper
you are.
issue. It's just like this is just statistics that's just like showing what happens like in the school system to begin with, that it needs so much help, you know? So maybe actually it will overcorrect, to use a market term, and then all the kids.
No, but
will
this
be
is just
brilliant.
another example of just look what happened to income inequality, the gap during the pandemic.
Huge.
I mean, think about everyone that you know in businesses related to what we do. They're all doing better,
Yeah.
you know, and it was accelerated.
Well, but it was masked also because the people who did not see their careers accelerate, at the very least, they got infusions of cash. And they were able to live a better lifestyle of not doing the worst jobs imaginable and having more, in many cases, being paid more to not work.
I feel like it's how do you turn school?
Which, by the way, don't say that on Twitter.
Which part?
Oh my God,
Say what?
being paid more,
Oh, yeah.
like
Just say
that
this
will
podcast.
open.
Well,
There was
not
a
even
period of
on
time
No,
statistically.
I know, but that I posted
that-
about that, and that was like can of damn worms.
No, because people don't
so-
want to have that statement made. I understand it.
Well, because it implies that they're lazy or that they're
Yes.
like. So I get it, but turning school back on is obviously going to be a massive challenge. But I don't like this sort of number because it's so alarmist. That like, come on, how do we know? Was the pandemic good for anybody? Of course not. Are people like getting screwed? Probably. Like, how do you catch up if you miss arithmetic or calculus or whatever? But this hysteria of the learning gap, $49,000 to $61,000. How do we know?
Now okay, so the pandemic was good for some people, which is also a thing that you're not allowed to say. But there are certain people in certain careers who got huge benefits from the environment
Me.
and were very heavily invested in real estate and stocks, and it benefited them to a great degree, but we don't know what that really does to them long term.
But how about people's lifestyles who benefited? Like, for example, I'm now home with my 2 kids. It was the best thing that ever happened to me. Obviously, I feel I would undo it. I feel horrible that it happened, but it's a reality for people that are lucky like me that like my life is now forever improved because of this awful, tragic situation, which is like a weird circle to square for people.
So McKinsey via Galloway says it's estimated we'll have lost as much as $188 billion a year in GDP due to unfinished learning during the pandemic. I say bullshit. How do you know?
Yeah. So what's his take on it? I mean, he seems to be he's a
This is
pretty
his
harsh
subject.
critic of education in general. Yet he's still employed by NYU. Listen, I think he's a really smart guy, and I like listening to what he has to say. So he's basically agreeing with the McKinsey report.
He thinks that the education system has not yet like adjusted to the new reality of just the way school is going to be and
How is
what
school
kids are
gonna be?
prepared for.
Well, I think the good news is that, there's great content coming out for kids. Like I saw Ellen is making an animated kids show. There is hope here. We have beautiful people like Ellen DeGeneres.
Is Ellen going to save? Is going
It's
to
called Little Ellen. It's on HBO Max.
You
I'm
had
like,
me for like 7 seconds.
I know, I love it.
Well, Dan is going to pull his kids out of private school and just have them watch Ellen.
Yeah, Little Ellen, her animated series.
All right, we're going to do some head to head. And
Whose was this?
this is me.
Did you threw this in here?
I threw this in here. So $40, right? So everybody, like all of Haley's fans on Instagram and all of Dan's friends and all of our friends, people who are not like hardcore traders, but they know these names. And for $40, you can have a share of Uber or a share of Robinhood. You have to hold it for 1 year. What would you pick?
This isn't close to me, but I'll go last.
Okay. Dan, what would you pick?
I'd pick Uber 1 year out. I would just say that I am massively underwhelmed with whatever supposed innovation that Robinhood has brought to financial markets and to retail investing, other than bringing pricing to basically zero. I don't really see the gamification. I think that's here to stay in a way. I just think the competition, I think their much bigger rivals are going to figure it out. And I also think they get really decimated in a bear market. The average account size is like
$4,000.
$4,000 or something like that. I think people are viewing, and you and I talked about this when I was on back in February, in the height of this meme thing, that people have on their iPhone, they have DraftKings, they have Coinbase, and they have Robinhood, and they're thinking them all the same way. You know what I mean?
It's an activity.
Yeah. So Uber, I will say, if you gave me a little, Uber is another one of those names, Michael, that has gotten destroyed. It's down 30% from its recent highs, over the last 6 months or something like that.
By the way, they both look like shit, but
And
they're both
never
about
profitable.
$40.
Well, I just think that Uber, I think Dara is going to figure out the path to autonomy. I think they're going to figure out how to do the fleets, and they're going to integrate lots of different services. And that last mile, like logistics delivery thing, is going to be a big part of it. I think that's a company ultimately I'd love to see it get slayed. I'd love to see it go to $30, and then long term, I think that's my view on that.
I could not disagree more. I love you, Dan, but I will take that side, which is, as the vomit saying goes, that's what makes a market.
Yeah.
I look at this as Robinhood is $35 billion. Uber is 72.
I didn't even get into the market cap, right?
And I think that, I don't think Robinhood gets killed in a bear market. I think that people are addicted. It's the most powerful social media app in the world, and they will start trading bearish 3 times levered ETFs, I think. So I don't think that they're ever. I think
It's like a casino.
Yeah, a lot of people get washed out. But if your average account is 4,000, it goes to 3,000. Do you really care?
Yeah.
So I don't think they're going away, and I just think that Uber's still like giantly valued.
I think you're forgetting one thing about Robinhood, though, is that most of the people on Robinhood are trading shit coins and they're trading options. And
but there's
I'm
not a lot of
telling
shit
you,
coins.
Don't you think they could get wiped out doing that and then just get bored and decide with their next $500 they want to do something else?
Yeah, by the way, I could be very wrong about this. Like,
Or you have the ego where you're like, no, it's this time. I'm going to make it right.
So
This is the trade.
There's going to be a lot of that too.
I could be very wrong about this. I think that they're going to stay in a bear market, and because there's always something working.
Yeah.
But I wouldn't be surprised if I am very wrong and if they just disappear. That could happen.
Dogecoin was basically a
But
third
can't
of
they
their
stop?
revenues.
All right, but
Crazy.
can't Robinhood just stick around, not disappear, like not all or nothing? But like, do you remember how hot the street.com was
Oh my God.
in the late 90s? Do you remember? That was the
No,
shit though.
no.
And it never died.
Yo,
it
but-
still
It
exists.
never died because of Jim Cramer.
No, but it just every year faded a little bit more.
Yeah.
They raised so much money on the IPO that it was like unkillable. And they just found new writers. And
What if Robinhood integrates sports betting? Like, why wouldn't they?
I'm just saying, right now, people are so excited about this thing. And in a 6-month or 12-month bear market, Michael will be right.
So which are you taking?
I'm going to say I own Uber. Let me full disclosure.
Oh.
I just feel like Uber is more than taxis, and the delivery business is now bigger than the rides business.
Yeah.
But the rides business will have a resurgence.
So it's you and me v.
The delivery
Michael.
business is so
Hey,
bad.
You said something
Wait,
really.
hold on, Haley.
Yeah.
Uber or Robinhood? You got
Right.
to. You got to pick one.
For the kids.
I know
for the kids.
it's hard because I hate like the Uber ethics. So I feel like I have to be an impact.
You like the Robinhood
Yeah,
ethics?
it's-
Stuff?
I don't like them either, but at least it's not. At least it's money, and it's not
Hey
like
Haley,
actual like.
Stalin or Mussolini? Who are you going with?
I'm always, you know, who I like. The I'll save that for another time. No, but at least with Robinhood, it's money. It's on people's lives. Whereas with Uber, it's like horrible treatment to the actual drivers and things like that, which is, you know, you can't really.
Do you take Ubers?
I don't. I try to take taxis actually.
Literal taxis.
I do take Ubers sometimes.
Okay.
But I really like. I grew up in New York City. I love a yellow cab.
Okay.
My mom's like that too. It was like,
Dan, what were you going to say?
I was going to say that Uber.
it's not like that's not me like betting with my wallet though. That's me
Right.
trying to be a good
We're
person.
just having. Oh, okay. I was saying.
Yeah.
Yeah.
No, I like
Yeah,
that. Robinhood is the best thing to happen to in-game betting on the weekends. Think about this, right? There were no sports all of 2020 or the part of it, right? And so then all these people, they went into the stock market, and it is, betting on whatever the heck you want to do Monday through Friday, 9:30 to 4 o'clock.
We need action.
So they need action, right? So now, when the action's turned off, when the market closes on Friday, what do? Why did DraftKings just do this deal with Simple Bet in-game betting? Okay, so it's not, daily fantasy. Oh, that's a bore now. You need to be betting on pitches. You need
in the
to be
middle of the
betting-
game,
In the
I
middle of
want
the
to
game.
bet.
I'm just telling you
on who's going to get injured.
Robinhood was the
on
best
Rams.
thing that ever happened to DraftKings and FanDuel in in-game betting right now.
I did in-game betting this weekend. So when the Packers were down 17-3, it didn't work out, but I took the Packers. It was like 15-1 odds. It's like, can Aaron Rodgers come back? Of course he could.
Of course you could, yeah.
So much fun.
He looks terrible.
But we love the action. That's what we're here.
Duncan,
who
what
cares
did
about the money? I
what
bet
did you ask
$15.
me?
Yeah.
What did you ask me yesterday at lunch? Like, why?
Why Robinhood wouldn't open up 24/7 trading and just be the ones doing the matching of trades?
Like, I hadn't thought about that. What if Robinhood opens an
interesting.
after-hours exchange? Its customers can bet with each
I don't-
other.
They can. It's regulated.
No, but I understand that. But they don't seem to give a shit about that. About any of the other
Well,
regulations.
that would get shut down.
Because the native Robinhood user, the person that started in the last year, in their mind's eye, there's no difference between stocks and crypto. So it's just like, oh, I'm trading crypto now. It's the same as trading stocks. Crypto never closes and stocks do. Don't you think they're like, why can't I trade at 8 o'clock?
Stocks trade 24/7 around the globe, not in the U.S. But on FTX,
Forex trades around the
no,
clock.
but I'm saying like literally, you can trade stock.
CFDs.
You could trade
Contract
stock
for futures.
derivatives. American stocks went off market hours on certain exchanges.
Like, you would have shitty liquidity.
Yeah, but you
But
could.
theoretically, if you're a kid who just started investing, like you followed some memes on TikTok or whatever, you open the account, you're like, wait, I don't understand. Why does this market go 24/7 and this
All right, I'm going
market
to talk
closes?
on my ass on this. I think what would happen is that the NASDAQ and the NYSE, any company that chose to go trade 24/7, 365 on, let's say, Robinhood, they would bump them from their exchanges because they're not regulated. And think about the major asset managers, like the biggest mutual funds in the world, they just can't have stocks trading all the time, right? Like,
What are you going to do about it?
Well, I just think that so you'd have to have an emerging threat to the major equity exchanges that can go through all the regulatory scrutiny to get to a point where you could have 24/7 trading. Is my
It's
guess.
already happening, not in the United States, but on FTX, there are like tokenized stocks that do trade 24/7.
That actually started? I thought they were just talking
No,
about it.
I'm almost positive that exists.
So you could trade tokens that are meant to represent the price of a stock at 11 o'clock at night.
But there needs to be a settlement mechanism, right? So this is the whole thing that's going on with these stable coins right now, right? So they're supposed to be worth $1. This is the Tether. This is the USDC that Circle has backed with Coinbase, right? And so the idea was that you literally have dollar reserves for every dollar stable coin. That's how it stays stable. And so one of the big issues right now is like there's commercial paper in there. There's all this other stuff.
we don't know what's in it. We don't know what's in it.
Well, supposedly. I mean, so the point is it's not $1. So here's the thing. So if you're going to make markets and these things and trade 24/7, you're going to tokenize anything, there has to be some sort of collateral based on it that reflects the underlying, right?
So it says FTX is partnered with CM Equity AG to provide brokerage services. They're fully
AG means German company.
fully regulated in Germany and a licensed financial institution. So
Does anybody do a good stock trade at midnight?
Also, like, is Germany like a place that like people are really like into stock trading? Is that like the hub?
Do they want to trade U.S. stocks there?
Yeah.
well, that's just where they're regulated. So this does exist, and I don't know that's inevitable because why would the SEC budge on this? Like, Apple doesn't need to be trading at 2 a.m.
A lot of things are going on right now that nobody asked for. that nobody really needs.
Mood.
But they're still like doing them.
Yeah.
I listen, I hate the idea of tokenizing a stock. Just trade the stock. But because I hate
There
it
we
so
go.
much, I know it's gonna
So
it's
can we
gonna
see
happen.
the liquidity here? So whatever. This is way to go, Duncan. Or is this John? Is this you, John? There you go, John.
I think this is Haley actually.
Yeah, this is me.
So 24-hour volume. Okay, so you see.
Wait. So PayPal September 2021 futures. What is it? $83,000 have changed hands in this
Look at
at
Tesla.
a price of $282.
$91,000 of volume in the last 24 hours for the Tesla token.
Why
Whoa.
are people trading Tesla tokens and not Tesla shares?
Because they're bored.
Is it a tax thing? They don't want to come out of crypto and owe the taxes? Like what could be the purpose? It's just boredom?
I honestly don't know.
Okay. So let's do one more. I feel like a lot of stuff is going on just because it can.
Yeah.
And there's not really any good reason for it. I mean, that seems to be a lot of DeFi
It's gonna
activity.
get dumber. If we think this is to the extent that we think this is dumb, it's like the train has left the station.